Hello and welcome to Pro Trader Strategies market commentary for Friday the 13th. It's March 13th. My name's Eric Wilkinson. Yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. I do about those same things in these daily market commentaries, and I layer on top of it strategies, option strategies that I'm implementing into my portfolios in order to increase the yield in that. Now, please remember that past performance of any trading system or methodology is not necessarily indicative of future results. And with that out of the way, let's get on with it. We crossed the pond. Not really a whole lot of economic data going on. Everything really is still news driven on the coronavirus, so we're not seeing a whole lot over there. We did see German final CPI coming in at 0.4%. That was in line with expectations. Now, we're starting to see some of these economic data points reflect some of the earlier February where we first started hearing or seeing some of the things about coronavirus. So we got University of Michigan consumer sentiment coming in at 95.9. It was expected to be 95, kind of baking in the cake with this coronavirus fear starting. And that is better than expected. So that is welcome, especially for that time where we were starting to see some of the kinks in the armor of the equities. Now, let's talk about the overall market. Still nothing changing with this tantrum we're seeing with OPEC, Russia, and the United States. Their oil prices still continuing to stay at low levels across the United States, really starting to see that hit the pump and those prices come down. So that is going to help out the consumer. You know, we still got to travel. If people are locked up at home, it's not going to really drive demand at all, but we could start seeing that kind of incentivize people to get out there with flights. Prices of flights going way down. Millennials are actually starting to fly some more, so they're getting incentivized by these lower prices and heading into spring break. You know, these people are looking to travel. As a matter of fact, a couple of colleges are starting to extend that spring break by another week. So college students getting 2 weeks off. Not only that, we're starting to see them have virtual classes and things like that. Something to note, logistics and say, for instance, Microsoft, people going out there and buying cameras for these remote type of meetings and or classroom situations. So keep that in mind. There's opportunities out there always. I've talked about that a lot recently. So we'll keep our eyes out. I'm keeping an eye on Logitech. So anyway, gold continuing to slide despite the fact that we're seeing this turmoil. Is this where people are pulling money out of gold and starting to put it to work? It kind of looked like that earlier this morning. We had the Dow up 1,300 points. Now it's probably closer to unchanged as the market's selling off throughout this morning session here. But we've got off 60 points in gold futures. You can see with gold futures coming off this dramatically, we're seeing volatility start to spike a little bit here. As we can see with implied volatility, usually we see that volatility start to spike on rallies with gold, but people buying some puts in gold and driving that volatility. We've got the bonds coming off just a little bit, well off the lows though, as you can see with the equities making that big move higher. Earlier this morning, we saw the bonds really suffer from that. Now they're starting to make a move back. VIX ticking a new high here, 77.5. Earlier today, actually, was just not too long ago, seeing that come off just a little bit, but VIX starting to spike as equities started to sell off here. Here's what I'm talking about with the Dow Jones Industrial Average. It's up about 400 points, but after being up 1,300 earlier today, that's really feeling like a big sell-off. We're just having 1,000-point swings in the Dow, which is just unprecedented. We've got the NASDAQ up 200 points. It was up over 400 points earlier this morning, so coming off a little bit, making this look like we're kind of building a bit of a bottom here, hopefully. E-mini S&Ps, again, off of the highs, up 48 points, which would be a big move up on any given day. But with these type of moves that we've seen recently and this massive sell-off, it feels like an unchanged type day with the markets coming off. Here we have overnight moving higher. A lot of this is with the stimulus package yesterday. Rumors were coming out, $1 trillion. It's looking like more like $1.5 trillion. Still looking at the payroll tax reduction coming into effect. Hopefully they can get that passed. I think that that will do more for the economy than this $1 trillion that the Fed is going to inject into the system, because then that gives immediate cash surplus to the consumer, which can drive volatility of money. You can buy toilet paper. Oh my gosh, I saw on Amazon, somebody was selling toilet paper for like $70. It's absolutely crazy out there. And so the E-mini S&P is coming off of the highs, but still up on the day. Here we have a couple of trades that I've added to my IRA. Okay, so I have an IRA as well as probably most of you do, and I've tried to add some trades there because I've kind of neglected it recently. And I added American Airlines in here, and I bought it in a little bit higher than where we are right now. Did it super small, you guys, so not really thinking we've completely found the bottom, but it's so cheap at this point in time, well off of 50% from the highs, and decided to go in there and add a little bit to this. Bought some shares at $13.89. So obviously a little bit off from where we were. It was looking like we were making a bit of a rally, but starting to see some weakness in there. Ford, I ended up buying a little bit higher here as well. Started looking good as soon as I bought it, but then started coming off now. And I bought Ford super small again at $5.85. All of these going into my IRA. And then Marathon Oil, it's so cheap. As a matter of fact, if I throw this up on like a 3-year chart, we can see that that is the lows of the last 3 years. And I can even pull up a 20-year chart and see that we are very low in comparison there. I'm going to have to slide this, but $3, you can see it did get down. There's $8. So super low prices across the board in Marathon Oil. Do I think that they're going to go out of business? No, I really don't. So basically at a 20-year low in Marathon Oil. So I decided to throw that in there as well and bought that at $3.70 there. So again, a little bit lower than, actually just right in line with where I bought it. $3.79 is where I bought that. Added those all to my portfolio, and going to hold on to those for probably the long term, because that's going into my IRA there. All right, that's about it. That's all I've done. Continuing to look for opportunities out there. Adobe's up really big today. We probably could take a look at Adobe and see it is up. Last I checked, it was up $26. This is something that I was thinking to add to my portfolio as well. Well off the highs though, they're up $15 on the day, but back above 300. And Adobe making a bit of a comeback. Remember, I've talked about this. These are things that we probably should be looking at, especially the consumer or the anything computer related. If people are going to be working from home, they're going to be buying these type of products like Microsoft, Adobe, Logitech, things that people are going to build out their home office with. So those might be something we can take advantage of. All right, there we have the disclaimer. Please remember that we are an educational company. Everything we talk about in these market commentaries is hypothetical, and we are not trying to get you guys to limbing off the cliff. We are not giving you investment advice whatsoever. All I'm doing is telling you how I'm going through this process and adding different types of trades to my portfolio. It's up to you guys to do your own homework. Past performance of any trading system or methodology is not necessarily indicative of future results. So please take a moment to go over this disclaimer to make sure that you know that there are incredible risks in trading, and especially in times like this. So there is no representations being made about any account that will likely achieve profits or losses of similar to those shown that we've talked about. All right, so that's all I got for you guys. Have a great weekend and a great Friday the 13th. If you can't take that, take it easy.